Silver borrowing costs surge on tariff-driven supply jitters. Surging lease rates for silver are upending the precious metals market due to fears of possible U.S. tariffs that could squeeze already tight supplies in London. Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics with, I think, what will be a rather action-packed show. I'm finding it rather intriguing, so hopefully you will too. So welcome on in where, well, we have a bit to cover, and I'll start right off here with a report from Bloomberg that mentions silver scarcity amongst other things that certainly caught my attention. Obviously, I know you're aware that the silver price is already above $40 right now, and we've had a rally yet. A lot of confusion about the tariff policies in general, because even despite Trump coming out with the executive order, finally clarifying that the tariff that never existed didn't exist and theoretically will not exist in the future, seems to still be a lot of confusion about silver. I'm a little confused. If it was exempted before, it's not like we have to say, well, here's a executive order saying we're not on a silver standard anymore. I don't was a little surprised that now there is confusion with silver, and I say this as talking with people who talk with the banks, say that their decision making is incorporating that they still don't know whether there will be tariffs or not. So but fortunately, Bloomberg put shed some light on this one, and let us dig in. I'm going to read a handful of this because it's quite interesting. And silver borrowing costs surge on tariff-driven supply jitters. Surging lease rates for silver are upending the precious metals market due to fears of possible U.S. tariffs that could squeeze already tight supplies in London. Sometimes I don't know how often to mention stuff like that when we go through the data there. I don't want to be like beating people over the head with it. We have talked about that plenty. I don't know if every video should look at the LBMA supply yet. Here, Bloomberg saying as much. U.S. market concerns silver might be subject to tariffs, which is reducing the pool of available leasable metal in London and lifting silver's lease rate. That doesn't sound ideal, at least depending on one's perspective on the matter. Silver futures and COMEX are trading at an elevated premium. Well, that's the EFP that has surged several times in the past few months and is surging yet again. So surging also are the lease rates, which they mentioned above. And as we talked about a week or so ago, Washington last month categorized silver as critical to the U.S. national security. And still waiting. That was the draft list they put out. Still waiting for that to become official. Although I did read something interesting recently where the author was saying that, you had all this metal come from London to New York in response of tariffs that never existed. This author, I don't know whether this is right or not, although it makes sense depending on how you look at it, was saying that basically they knew they needed silver, so they brought all the silver over before the announcement of needing it as a critical mineral, at least the draft announcement to this point. And I've had several of my guests. Kranzler was saying something along those lines. I don't know. I mean, we didn't know back then that they were going to add it to the draft list of critical minerals, but I can't tell you if that's actually what happened or not, but interesting to think about. But let us get to a few more highlights here. And that sent futures in New York above the international benchmark as traders price in the risk of silver getting hit with tariffs. So I think you see that they're worried about the tariffs. Here we go. This demand for physicals in turn reducing the pool of available leasable metal in London, and as such, lifting silver's lease rate. Physical supplies of silver were already looking tight, with European refiners focused on recasting gold bars. Meanwhile, inventories in London have dwindled as investors pile into exchange traded funds. And I might add that I did just finally release that silver report, which you can download for free. And if you scroll down to page 62, we actually did talk about this quite a bit because here is TD Securities analyst Daniel Galley, who we'll get to his latest comments in a moment. This is just what we knew as of last Friday. Mentions that we were down to 305 million ounces and 250 million ounces are the daily turnover. And then here you can see, according to the latest LBMA chart, we're already down to 148.5 million ounces, and that does not even include if some of those COMEX shorts are indeed hedges for London physical holdings, which would net out even more if that is how that works, as the banks often suggest, or even some portion thereof. So certainly that makes sense what they're saying about dwindled inventories, and here the lease rate is spiking. And here was the part that just was reminded me of one of those Hunt Brothers books I've read about when you see things like that scarcity is already filtering through to the market. And then down at the bottom, they mentioned so far in September, there have been larger than normal deliveries. And I'll show you a quick look at those. They're on the bigger side, not Katie bar the doors just yet. Here you see 11,000 contracts in September. And we had 15,000 back in May, 16,000 in March. Obviously, you're going to have a higher number during delivery months. So it's a bigger number, yet perhaps what I find slightly more significant than that is the latest report from Daniel Galley of TD Securities, where he gives an update on that free floating stockpile. And it says here, if investment demand picks up, as we have seen happening in previous easing cycles, stockpiles could be depleted within 4 months. The drain in global inventories persist amid years of structural deficits, exacerbated by mega themes that should continue to attract capital into precious metals ETFs, where there has been a fair amount of gold and silver going into, as opposed to what we've seen on the retail level, which has still been rather slow and a fair amount of selling. Now, I would want to point out here they say, Galley said the stockpiles could run dry within 7 months. Here it says within 4 months, so I'm not sure exactly if it's 4 or 7, although I did get to see the cover page of the report. I'm working on getting my own copy of the report. I'm not actively a TD Securities client, so I don't have that yet. Although, at least here we can see what was said on that, where they mentioned the current macro context is fueling ETF inflows that at a pace that can now deplete the LBMA's free floating silver inventories within months, not years. So they didn't say 4 or 7 there, but either case, the dislocations in EFPs associated with silver's inclusion in the draft critical minerals list will accelerate this progress. With no sign of the boogeyman, prices must rally to attract metal from unconventional sources, barring a recession. This theme may finally be culminating towards the end stage of the silver squeeze we envision. So there you have it. That's what is being published by Bloomberg and TD Securities right now. So certainly interesting times as we see where I'm recording on Tuesday night here, 41.43 silver futures. And fortunately, I did just record an interview with Sean of the SGT report. This was back on Labor Day, so a week ago, although I thought I did all right on this one and hit some key bullets there. And anyway, I was given permission to share this. Think you'll enjoy it. And so, for an overview of how we got here, what is actually going on, and what are some realistic expectations and paths that this could lead to, well, here you go.
Hey friends, welcome back for this epic episode. Friends, silver just pierced $40, a massive resistance level, and get this, silver is now less than $10 away from hitting its highest recorded closing price in 2,500 years. And you can credit that little statistic to the criminal bankers' paper games, which are now in the process of collapsing. Chris Marcus from Arcadia Economics joins us to break down this historic moment. Before we start, just a quick word about a valued sponsor. The science is in. A clinical trial found that just 10 grams of collagen a day for 8 weeks led to a roughly 20% increase in skin hydration and a 17% improvement in elasticity, while also visibly reducing wrinkle depth. If you want to help improve your skin health, it's clear that collagen is essential. Multi Collagen provides my skin with 5 types of premium collagen to help attack wrinkles from every angle. And I'm seeing smoother skin, more elasticity, fewer fine lines, and a more youthful glow. Plus, Multi Collagen mixes smoothly with my morning coffee or tea. There's no clumping and zero added flavor. I do put it in my coffee every morning. Do yourself a big favor and grab yourself a bag of ageless multi-collagen now for 51% off only at healthwithsgt.com. Plus, by ordering today, you'll also receive free VIP live health and fitness coaching for life, a free ebook titled The 14 Foods for Amazing Skin, a 60-day satisfaction guarantee, and free shipping with your order. Once again, this offer is only available at healthwithsgt.com. The link is below. All right, friends, we'll sound that under. That is Chris Marcus, the shredder over on guitar, celebrating $40+ silver, guys. It's been decades in the making. Chris is back from Arcadia Economics. Chris, how are you, sir?
Sean, I'm doing quite well today. Happy Labor Day to you and your audience, and always fun to catch up with you and great to be here. And as you can see, I guess in that corner, that's Monday's silver futures, where not only are we over 40, but now over 41. So hopefully that makes a few people happy out there, and we can certainly dig into that.
Yeah, futures flat as silver soars to 11-year high. Friends, with rate cuts coming, 50 basis point rate cuts right around the corner. Well, guess what? Print, print, print is what's going to happen.
Sean, are we getting 50 in September?
I don't know if it'll happen in September, Chris, but I got to say, once we're past 40, as we now clearly are, we're kind of back in price discovery mode. Certainly once we breach 50, it'll be Katie bar the door. By the way, guys, the ultimate cup and handle of our lives, which has been 50 years in the making. Let me show you this. Silver hasn't seen this price in 11 years. What comes next, Chris? Do we just break the banker's back? That's what I hope happens.
Well, certainly an interesting time. Although, Sean, I actually meant, you suggested that we're getting the 50 basis point cut. Do you think that's happening in September?
I think it's in the cards. What do you think? 25 points?
Oh, if I had to bet an ounce on it today, I'd probably say 25. Although I know I get it, the importance of whether it's 25 or 50 yet. If you take a step back, I mean, it seems Trump is going to go to great lengths to get someone in there that's going to lower interest rates. So I would suggest getting overly worked up about whether it's 25 or 50 at September by next year is probably not going to matter. And we're going to have lower rates. So I would guess 25 in September, although I know there's a lot of people suggesting 50 and seems a bizarre strategy when we've had inflation over the Fed's 2% mandate for over 4 years now, that the plan to get that down is to cut interest rates further, but that's where we are. And you can see the silver price responding to that. And gold as well, which Sean, on Monday, we're in new record territory for the gold futures. What do we have? Pull it up in the background here, but
A new all-time high in gold today as we're talking, $3,493 per ounce. That's up $31, while silver is up even more, 2.5%. Silver's up more in percentage terms. Chris, we've been waiting for this our whole lives, I got to tell you. I've been waiting for this since, boy, I bought my first silver in 2007, I think. Maybe it was 2006. They were 10-ounce silver bars. And on this call, by the way, I'm going to just show some of my silver, just a little bit of my silver, because I think
ooh,
it's time for everybody to rethink this previously worthless investment. Chris, it's been a painful road, as you know. So this is really, really an interesting time to be alive and watch this all unfold.
yeah, it sure is. And in terms of the gold futures, you were quoting the spot price. I have gold futures 35.46 right now, and that looks like it got up to 35.56 was the high of today, but still that's new territory. And Yeah, you summed it up well, where it's like a lot of these things that, and Sean, I know you've been doing this for a long time, so you've been hearing gold and silver bugs saying, well, one day, watch out, foreign creditors, they may not feel as safe with the treasury, or you're going to see a gold rally, and it's not one day anymore. It's happening. It's happening now. Yeah, I think there's a good case to be made that we could be still in the early stages of what's happening, which by all means is not to say that there's not going to be pullbacks and corrections along the way. I think you and I were talking about it before we hit the record button, where I see there's a lot of, 80 by Christmas, and, we're going to be in $100 territory next year. I don't know that I would, mark that down as a guarantee just yet. It's interesting in the US, we still have not seen people piling into physical. In fact, especially on the silver side, there's been a wave of selling for the past probably even longer than 2 years now. Last year had a lot of reports where a lot of the silver that was being sold back. So that's people that are selling coins and bars that have, they purchased from a coin dealer or, one of the online shops. I thought it would have been because a lot of people had been sitting there on silver, that they've been waiting to break even or be out ahead when it went over 30. Dealers I talked to, they say primarily it's people that either have expenses to pay or they want to buy a house or they inherited it. So not necessarily selling just because people want to close out above 30, but still there's been a lot of selling to the extent that several of the dealers and wholesalers have mentioned that some of that silver is getting melted down into industrial grade bars and in many cases being shipped over to China. So it's interesting where the largest market participant, at least from an investment standpoint, which is the US, the biggest customer is selling, yet we also hit a record in industrial demand last year, which has been able to overcome the selling that's happened on the investment level and still left us in the a deficit for, I guess it's 3 years if you don't include the ETFs, 5 years if you include the ETFs, but also not a small deficit. It's been around 150, 200 million ounces for the past couple of years, which has resulted in, I know you talk about this from time to time, how we've seen the inventories come down over the past few years. So interesting. Probably not the best time to be short. And with all that said, so now we have $41 plus silver, $3,500 plus gold. Yet the main thing that at least for me, but I would imagine a lot of other people that led them to invest and actually buy gold and silver, which is the big elephant in the room, is still the debt that's outstanding. That despite promises of big, beautiful bill, that number isn't coming down yet. So especially on the gold side, it's interesting to see the price where it is before. I mean, not only haven't we had resolution to the debt, I mean, there's not even talk about how that's going to be resolved. Now we can surmise on what may be getting discussed inside the Trump administration that they don't necessarily say publicly. But still, you have the $3,500 gold with the big elephant in the room, and on the silver side, you have this situation where we're running a deficit, seeing the inventories draw down. Now, to be clear, we're not at the point yet where it's like, all right, here's a 200 million ounce deficit, and there's 50 ounces in the LBMA. So there's still silver out there, although that's always the guessing game. How much of it, who sells at what price? So I mean, I'm guessing if silver hits $45, Sean, you're not going to be rushing off to your local coin shop. So
Well, no,
but I
I'm
mean,
not.
certainly there are several metrics that show that with the depletions that this thing is a bit fragile, and we can talk more about that.
Well, you took the long way around of saying retail is still not paying attention, Chris. Retail money is not coming into this asset. And I got to tell you something that's really interesting regarding that. The same is true with Bitcoin. If you Google the public's interest in Bitcoin, Bitcoin searches, they're not paying attention. And they're not paying attention to silver. And I'll give you an anecdotal story. My wife and I drove by a Gold Guys location in the state of Minnesota recently. I don't know if you're familiar with them. And I walked into the shop for the first time in my life because I wanted to ask them a question about taxes. Do they
Huh.
report, is there taxes involved in selling to them? I'm not going to sell anything to them, but I just wanted to hear their response. There were two guys sitting in there with two middle-aged women selling trinkets. The middle-aged women were selling their trinkets probably to pay bills. You know what people are paying attention to, Chris? They're not paying attention to this silver breakout. They don't know the history of this suppressed asset. They are trying to pay their energy bills. They are trying to pay their mortgage bills. They are watching
Yep.
inflation run away and the dollar lose its value, and they don't understand it. I think most people simply don't understand what's going on here, Chris. And so they're not buying silver. They're not buying gold. They're not buying Bitcoin. And their dollar is losing purchasing power every single day. That's what's going on, Chris.
Yeah, that matches exactly what I've heard, where there's a lot of people selling to pay for expenses, which is understandable when you think about how, as transitory as Jerome Powell says that the inflation was. I mean, it didn't come back down. It's still above their target. It hasn't come back down. That won't come down, and people still have to pay the cost of that. And my heart goes out to people, especially if you're on a fixed salary and you're working a corporate job or whatever type of job, and you're on a fixed salary and you're seeing the margin that, hey, we used to be able to save some money. Now everything, even the government CPI index, which I think we know the numbers are a little silly. And Sean, who knows? Maybe we'll get Trump to fire whoever has been cooking those up. Yeah, I'm sure you saw how he fired the commissioner who compiled the labor numbers a couple of weeks ago, right?
Yeah.
So, but even with those numbers, shows from I believe it was May of 2020, right when COVID hit, and there was prices, at least the index went down briefly, and we're about 26% higher since then. So just since 2020, what the government is claiming is acknowledging your dollar can buy is it's lost 26% of the value since then. And in Jerome Powell's incredible Jackson Hole speech, which there were some real whoppers in there, in my opinion. One of the things he mentioned is that, well, GDP growth is slowing largely because consumer spending has slowed down. Well, I mean, I wonder if that's connected. I'm guessing it probably is, where prices are continuing to go up, and for a lot of people, that's not easy to handle. And
But let me interject and just say, let's not bury the lead here, Chris. Silver breached $40 an ounce for the first time in 11 years. And this is a really, really big deal, and the normies aren't paying attention. And I was thinking about this earlier today when I was waiting to do this interview with Chris, and I thought, if I really had my ducks in a row, on Thursday or Friday of last week, I would have invited not just Chris, but Lynette Zhang, Bick Swear, Andy Scheckman, David Morgan, and have a 5 or 6 people roundtable to discuss this because it is an epic moment. And for those who are not paying attention, retail money, this is the importance of the story. Here's Lynette Zhang's take on this epic cup and handle, 50 years in the making.
As long as derivatives exist, right? So silver futures where they can create as much silver as possible. But then again, remember, we're coming to conclusion, and I do consider what happened in 1980 at that $50 mark. I consider this a massive double cup because it did come up to breach that level. And so when it goes above that 50, would 3 or even 4 digits in the silver nominal price, the price that we see, would that be outrageous? No, it's worth at a minimum $1,300 an ounce. And that's just based on the 20th to 1 that historically we were. These were both, well, it's peace dollar. Okay. These are both a dollar, little $1 gold coin and a silver dollar. So that's a 20 to 1 ratio right there. So according to my calculations, you're looking at the true fundamental value of an ounce of gold at somewhere between $33,000 and $40,000 an ounce. So at 3,400, spot gold is a ridiculous bargain. But that also then means that silver's fundamental value at this moment is somewhere between 1,300 and 2,000.
All right, I'll pause it there. I know those are lofty numbers. Those are difficult numbers to reconcile. That sounds like poppycock. But let me just say, with 37 plus trillion dollars in debt, and the printing machine continues to go burr over there at the Fed, it's only going to get worse, Chris. And I'd say one more thing. Maybe we should invite Mike Maloney on too, because he just made a point in a recent interview that if silver had just kept pace with real estate since 1980, it would be $450 an ounce. So it is the most undervalued tangible asset on planet Earth, physical silver, Chris. Do you agree or disagree?
I don't know if disagree is the right word, but I would phrase it a little differently. And Sean, I'm glad you brought this up because I think I mentioned to you that I just finished up a silver report. Ended up being a little longer than expected, but I think we'll have that released this week. And that this is actually one of the topics that it touched on that I don't often hear addressed. And I think I wish and hopefully, and thank you for letting me say this here because I think it's incredibly important for people to understand. It gets missed a lot. So it's, I don't dis, on one hand, I don't disagree with what Lynette's saying, but what needs to be factored in is that, yes, you could come up with a valuation of gold and then look at the mining ratio or the historical ratio or any ratio you want. And yeah, I'm in complete agreement of what the Coinage Act of 1792 says, what it says in the Constitution. The only thing is that we're not running that system right now. We are not on a silverback dollar. So yes, could you say if we were following that, then that would be a different story. But as you know, it's like, well, why start following the Constitution that we swear an oath to
Right,
now?
right, right, right. Let me interject. Let me interject because I'm totally tracking
There's
with you. And that is a very, very rational, intelligent way to look at it. You're not wrong. But the elephant in the room is mountains of bankster paper short silver to the tune of billions of ounces in a week in some cases. They have done this to destroy the silver market and artificially keep the silver price low, and they've done it for decades. And it does appear now that that system of control is in the process of failing. Can we talk a little bit about that? Can you help us quantify how trapped Bank of America is, Deutsche Bank? Who are the banks that are really trapped right now because of their mountains of derivative paper short silver, Chris? Because that's the elephant in the room. We get rid of those guys, and silver probably does go to 400.
Well, actually, let me pull something up for you here. And I agree with what you're saying, where the big elephant in the room, like we mentioned before, is that one if you hit a break point with that debt, which I guess we'll see what the exact timeline on that is, but I mean, seems like somewhat of an inevitability at this point. And let me pull this up. So yes, when that happens, and if money is flowing out of derivatives because they're going bad, then you're probably going to see some really large numbers. Similarly, if silver gets to the point where some company can't get physical silver for their business needs, and that's becoming a legitimate possibility with the way the dynamics that I discussed before lay out. And perhaps rather than any specific banks, let's take a look at this here because there's a guy named Daniel Galley who works for TD Securities and had an interesting report earlier this year called Sleepwalking Towards a Silver Squeeze. And he was talking about how even before we saw the metal flow from London over to New York, when there was the uncertainty on the tariffs and on it, it may be interesting where a lot of metal came here and tariffs that never actually happened. And I don't believe there were ever tariffs even threatened against London, but either case, the metal came here. But even before that happened, you had the LBMA, like the other inventories, were declining. And this chart here is pretty handy because this shows the total silver holdings. So this is, we have the futures here in New York where there is some settlement, but as they say, underpinned by the London market. So this, if you include both bars, that's the total that's in their vaults. But the gray here, that's for SLV, all of the other ETFs. So we consider this, they call it encumbered, which means the green part is what's actually left, okay? So, as of, well, here's an interesting comment from Daniel's report. This was back in January. It says, with only 200, 305 million ounces remaining in the LBMA's free float, that'd be that green part there, the world's largest stockpile is nearing critical thresholds that could disrupt silver market structure. After all, 250 million ounces of silver are required on an average trading day. But here's the part that I think you will enjoy, Sean, because if you include what is measured by the COMEX short position, and here's another distinction that muddies things a little bit, but I'll still bring it up for the sake of accuracy. You'll often, if you listen to the banks, they'll be saying often that, well, you can look at this short position on the COMEX, but that's not a true short position because that is the hedge offsetting their physical holdings in London. Now, I'm guessing there's some degree to which that happens. I doubt it's one to one, and certainly spoken with people who are a bit closer to that and think there's some consensus on that. But what is fun is that if we have so Daniel Galley said that there was 305 million ounces beginning of January, and 250 is what's used on a regular trading day. We're down to 276.9. But if a big chunk of this green is being offset by the COMEX hedge, you have two scenarios, either of which I would say are not ideal or will probably come as great news to your silver investors. So let's say that the banks are right and all of that's a hedge. Well, that short position was up to what do we have? 220 million ounces was the bank's net short position. So if all of that is offsetting a hedge, that means that your true free float would be 276 minus two. You'd be down to about 55 million ounces. This actually got down to about 8 or 10 million ounces at one point.
Can I pause
So
you
if,
right there? Can I pause you right there just for one
please,
second? Hold
please.
that thought. Hold that thought. Can you restate what you just said? It was down to how many? 10 million ounces?
There was one point at which if you subtract the short position, if you assume that that's offsetting a long position from what's the free float, that about a month or two ago, it got down to around 8 or 10 million ounces at one point.
Okay, pause. Brilliant.
Yep.
Because I just want to put this in perspective. Regardless of how many millions of ounces they say they have over there, one man bought 12.7 million ounces of silver just over the past couple of months. His name is David Bateman. He bought 1.5% of the world's annual silver production. One man, one billionaire. He bought a mountain of platinum and gold. This is the story, folks. And I'm sorry, but the smoke coming from the COMEX and the LBMA cannot be overstated, in my opinion. And by the way, I want to play a clip from Mike Maloney in just 1 second, who cites something crazy that hasn't happened to silver in 2,500 years. But go ahead, continue, Chris.
Well, by the way, I don't know if I'm supposed to say this on the air, but David Bateman, I'm assuming that's your alias because I've heard about what your garage looks like and some big shipments that come in there late at night. But either case, so if the short position is really a hedge and you net that out, I mean, right now it'd be about 55 million ounces in the theoretical true free float, let's call it. If it's not all hedged, then if it's not all hedged and the price has been going up and someone's at least some amount short, that would mean there is someone getting clobbered on the way up. And um, also, I guess I'll add that we did set a new all-time record for largest short position ever about a month ago. It was around 54,000 contracts. So you have the big short position in the COMEX is there. Now, what's offsetting that? I'm guessing the banks probably aren't ever going to come out and tell anyone about that, but let me know if that made sense. How, whichever of those two scenarios you look at, there's still something unideal, with the bigger takeaway being that this is on fragile ground.
Thousand
Did that all make sense?
1,000%. Fragile ground for the bankers might be a great title for this video. And let me just play this because I mentioned Mike Maloney as somebody who should have been part of our little panel here today. Lynette Zhang, Andy Scheckman, Bix Weir, David Morgan, and of course the great Mike Maloney. Let me share this from Mike Maloney. Silver just did something it hasn't done in 2,500 years. The breakout is here. It hit a 13-year, 11-month high intraday at 40. It closed a quarterly high not seen in a millennia. This is an historic technical breakout. It went into backwardation. Central banks are buying. It's been declared a critical mineral and added to the U.S. draft 2025 list, confirming its strategic importance for energy and national security. The supply demand squeeze is here. Guys, again, this is a celebration of what's happening right now in the silver market. And congratulations to everybody who's been stacking for the last 10, 20, in some cases 30 years. Here's Mike Maloney.
Highest close in the last 2,500 years. And I am going to celebrate when silver breaks that, on a closing basis on stock charts, it says that $49.45 was the high. The intraday high on the Chicago Mercantile Exchange was 52.50. And so once this thing passes $50, and it will, and it's probably going to do it soon, then it's time to kick back and have a beer, because I've been waiting 22 years for this.
Hey, friends, pardon the interruption. Just a real quick word. Let me ask you something. If you built up $100,000 or more in investments, do you really want all of it riding on the stock market? Banks, billionaires, and even entire countries are loading up on physical gold and silver. Why? Because when markets swing and countries print, real assets hold their value. That's why I want to tell you about Noble Gold Investments. They make it simple to own investment-grade gold and silver, the same kind the big players are buying, and you can actually hold it in your hand or put it safely in your retirement account. You've worked hard to build your wealth. Isn't it time you protected it? Noble Gold is family-owned, trusted by thousands, and ranked #1 in gold IRAs 4 years in a row. Their precious metals specialists are standing by to answer your questions and walk you through every step. Simple, safe, easy. Visit noblegoldinvestments.com today. That's noblegoldinvestments.com. It's time to protect what you've built.
Kick back and have a beer, because I have been waiting 22 years for this.
22 years. A lot of us have been waiting a very long time, Chris. And that's why I wanted to do this call with you specifically on Labor Day as a celebratory call for our audience who has been victimized by the criminal bankers year after year after year after year for decades. In fact, do you remember when it hit that 49.50 nominal high? That was right, 2012. And then JP Morgan knocked the price down on that Sunday night by $6 an ounce. I watched it happen in live real time, Chris. I remember it. I still have the bruises and contusions from my abuse at the hands of JP Morgan.
You remember that was the same night they announced they threw bin Laden in the ocean, too. So it was quite an evening, and I remember that one well. It was not the most fun day, shall we say. Although, Sean, I have some additional good news that I think will make you smile behind your camera there. You see this document I just pulled up, Silver Investment 2021 report?
From the LBMA. This should be good.
I don't know. Maybe you haven't seen this one before, Sean. So this will be my Labor Day present to you. This was written shortly after the silver squeeze in 2021, and maybe I should have mentioned this first, but this will put into context what, we just said that we've been running deficits now, getting near that free float's getting low. So this was shortly after the silver squeeze, and this is written by, you saw this is from the LBMA. This is in my report. As touched on above, the recent jump in ETP, exchange traded products, imagine ETFs, they're using the terms interchangeably. The recent jump in ETP demand has led to fears as to whether there are sufficient above ground bullion stocks should ETP holdings see a further increase. To add to that, I think you know who, and many of your listeners know who Rick Rule is, who was involved with the Sprott PSLV Trust. And I remember hearing him talk about how, because as that happened, they were getting a lot of inflows. And there was an interview where I heard him say, he's like, well, we cleared out what was in New York, and we cleared out Chicago. He rattles off 5 or 6 cities. So I had to track him down to talk more about that. And he mentioned that had retail kept up that pressure, and the reason I mentioned him specifically because since he was involved in PSLV, they had a bit of a closer, unique vantage point what was happening, and he felt that had retail not stopped buying, that there would have been an issue back then. Yet, even despite that, that did slow down. That it's still on borrowed time. And here you'll love this part. This was concentrated in the iShares fund. He's talking about the SLV, where holdings rose by 110 million ounces allegedly over a 3-day period, which would at least be physically impossible. Also factor in JP Morgan, who had recently been fined $920 million for spoofing the gold and silver markets in the CFTC's words on hundreds of thousands of occasions, so not just once or twice. And two of their guys are, I don't know if they're still in jail, but two JP Morgan guys did get sent to jail for this. So that's a whole other racket. But given that most of this metal was allocated in London, fears emerged as to whether there was enough silver should demand continue at this pace. So it's not just Rick Rule who was on the PSLV side. Here's the LBMA putting out a report saying as much. This suggests that had demand in iShares continued at the frenetic pace, it would have only been a matter of weeks before London's existing stock was used up. So this is after silver squeeze in April of 2021. We've been running deficits since then. So it's like, how stable could this be? It's not like the situation improved. Plus, I think people maybe often think, well, we'll just get these miners to, work overtime, dig up a couple more rocks. Doesn't quite work that way.
Not at all.
You just
No.
you're coming out of one of the most severe bear markets in recent mining stock history. There's one guy I have on my show quite a bit. He's a fourth generation miner. So he's been doing this. His father's been doing this. His father's been doing it. And he's been saying this is the most severe bear market, which has finally turned around this year. But I mean, it's not like we have all hands on deck. And you mentioned the strategic mineral thing, which, to be clear, it has been added to the draft list. And there's a 30-day period. I'm not sure if at the end of that 30 days is when it actually becomes decided or not. So it's still in the stages. I think there's a good chance that it will be added,
But that's a big deal, right? It's a big deal for the US government to finally acknowledge this thing as precious, as valuable, as important to national security, because the bankers have made us all feel like it's a worthless relic for a very, very long time. And when we talk about the silver to gold ratio, let me just show you guys something, because I want to show you just a few things from my little personal collection. It's no big deal. The really cool stuff is in a vault, and I should start digging that up and looking at some of these things because they are precious, they are valuable. I used to go to the coin shows and I used to buy things that were very, very rare, and I'd pay just barely above spot for them. But what you're looking at on my screen right now is the 2022 chart for silver, and it chopped around between like 26 and 17 all year. And right over here between 17 and 21, I was buying kilo bars of silver all day long. You could stack these things all day long at about $600 a piece. Let me show you what I'm talking about.
I'm honored to be seeing Sean stack. There we go.
So no big deal. They're just kilo bars. Now, these kilo bars averaged about $620 during that 2022 period when I was stacking these things. Today, the same kilo bars are trading for $13.50 over at SD Bullion. Now, let me show you this one. Now, this PAMP Swiss bar, this one is $13.89 over on SD Bullion, if you can even get it. By the way, there are no kilo bars available right now at APMEX. Friends, this stuff is disappearing from the marketplace, and just wait till it goes over 50 or 100. Wait until the retail money starts to pay attention. And so the point is, Chris, is that I think those of us who have been stacking for a long time, we need to rethink the value of this stuff because it's been ingrained in our brain for so long that it really isn't working for us. It's not helping us prepare for our retirements when it trades at 20 for 2 decades straight. One last thing I want to show you. This little silver button from the Scottsdale Mint, well, it's 5 ounces, right? I think I paid maybe $90 for it. Today, you can't touch this thing for less than $230. And you want to hear the punchline to the story?
I'd love to.
The punchline to the story, and I just discovered this today, is that evidently In addition to Costco, Walmart is now selling silver. In this case, a 5-ounce silver button from Scottsdale Mint for $233. Chris, retail money is not only not paying attention, they don't understand that currently miners find silver in the ground at a ratio closer to 8 to 1. We're not talking the historical ratio of 20 to 1. They're not finding the stuff. Mexico's not exporting silver. Mines are being shuttered. Do you know how long it takes to open a new mine? Chris, you could speak to that. What's it take? 10 years if you're lucky to
Anywhere
even
from a
hit
couple of
silver?
years to a couple of decades.
It's unbelievable. I will continue to make the case that this is the time, and everybody listening, not financial advice, I'm just telling you what I've been doing. I would stack some physical silver because the normies have no idea. They're not paying attention, Chris.
We got to get you in high school, Sean, and be like, come on, kids, you got to stack like Sean. This is how you do it. And um, yeah,
Come on,
you're
kids, follow me. Let's go down to the silver shop.
Sean, you can, when you go to the next fourth grade inspirational speaking gig, you can also show them this one just to finish up what we were saying before. This is the LBMA silver holding. So here's in 2021. You see there was a peak there. So basically, the whole fear is emerging, might run out in a couple of weeks if this or that continues. We've had deficits since then. And this is what's happened to the LBMA supply to the point where back in January, we have Daniel Galley of TD Securities warning about how close we're getting to the free float, which if the banks are really hedging that short, if that short position is really a hedge, then we've blown through that. So, and like you mentioned, the with the miners, you have a big time lag. So even if you had $100 silver tomorrow, and we'll have to assume also that mining executives were thinking, all right, well, the price is going to go back down to $40, which that's a difficult assumption to imagine. But let's say that they decided, all right, we'll invest capital based on this price. You still can't flip the switch and get it tomorrow. Now, will more silver come out of existing stockpiles? Yes, we've seen that $30. If we get over 50, there will be some people who are selling. Gonna be a lot of people who are not, but and then the last thing I wanted to mention, Sean, going back to the strategic resource, I was wondering well, all right, if it does get listed, what does it actually mean? And I actually talked with Keith Newmeyer of First Majestic Silver. Geez, this might have been 2 years ago now, because they had petitioned the Canadian government to list silver, and he was saying that essentially what it actually means is that it would theoretically facilitate more easily mining companies getting permits. And Sean, actually, you may have seen this. I'll see if I can pull this up here quickly, but with that whole rare earth situation that was going on, we did have, there we go, the U.S. government, because there's, that one of those things where you can't go to war without it. So that's a little bit of a problemo. And here we have MP Metals seeks mega rare earths deal with to break China's grip. And MP Materials unveiled a multi-billion-dollar deal with the U.S. government on July 10th to boost outports of rare earth magnets and help loosen China's grip. So something that was considered a strategic metal, now the government is making deals with the miners. And here was the part that really caught my eye. On materials used to build weapons, electric vehicles, and many electronics. And I'm thinking, gee, that sounds like something else I've heard of. And now we're in the phase where it seems like there's a darn good chance that it's going to be listed in the US. That could conceivably carry over. I know Canada's been made aware of it too, which is where most of these mining companies are headquartered. So that would certainly be good news. And if you're seeing government, forget everything else. Here's a good rule for investment. If government policy changes and starts directing new money into an industry, you're going to see that reflected. So, fortunately, the mining stocks have, they've turned around a fair bit this year. But I mean, if we're at this point where now government is taking stakes, well, we hope they're not influenced. We don't want government running the management decisions, but that's an encouraging sign for the mining stock investors if you're going to see government capital flow in there because they simply need the metals, which I would suggest is accurate, and why you and I and the other people you have on your show or cited before talk a lot about how, hey, we have this deficit here, and the price for a long time didn't seem to care, but I think that's factoring in because on the institutional level, Bank of America has been writing about it for a couple of years, and a couple more of the banks have started doing that. And I can find it in the background, but you have seen silver and gold start to go into the ETFs. Now, we can leave aside, people's thoughts and is that ETFs truly backed one to one. Based on that claim 4 years ago that 110 million ounces went in over a 3-day period, which is now on one hand they're just moving the label of like who owns this one stack. They switched the label over to another pile, so it's not like all that went in there. But here we go. I will show you what you see in the ETFs. Here is silver. This blue line shows you the amount of metal. So here's 2025. You've seen a good chunk.
Can I just say something quick? Can you go back? Go back one. Go
Okay.
back to that last chart. Okay. So in theory, we're to believe that that chart reflects the amount of physical silver in the vaults backing the SLV. Now, in theory, that's a great theory, but I don't buy it. I think that silver has all been hypothecated and rehypothecated. And has there been an audit? Because that might reflect the demand for silver, the dollars, the fiat dollars chasing silver through the SLV. But I'm very dubious. I'm very dubious about the idea that they actually have all of that physical silver and it hasn't been hypothecated and rehypothecated and lent out. What do you think, Chris?
Well, I think that's a legitimate concern. I mean, do I think there's nothing in there and there's just a bunch of footballs in a vault? No, I don't think that's the case yet. There is a lot of legitimate data points suggesting that things often do get rehypothecated. You saw the Bank of England a couple months ago said 4 to 8 week delays for getting your gold back. And keep in mind, this isn't like, your grandma storing her six eagles there. This was for large institutional funds, central banks. So, and as I know, Sean, you're pretty familiar. Wouldn't you imagine that if you're running, let's say you were running a bullion dealer and you're doing storage, probably the last thing that you would ever want to say to your customers if you want to keep getting business is that we can't give you your metal for 4 to 8 weeks, right?
Yeah, right.
So when the Bank of England's doing it, and here's another thing to leave your audience thinking about. We did hear the coverage of the metals flowing because of the tariff and tariff uncertainty. Well, it turned out there were no tariffs, and there is a school of thought that maybe the metal didn't come entirely because of the tariffs. I don't know that there's a set answer out there, but I think there's some credence to at least considering both possibilities. I've heard some speculate that it could have been on behalf of the US government. Trump has not called me and told me that, but at the end of the day, we do also have an administration where just about everyone outside of the basketballs on the Trump team has talked about how the dollar is overvalued.
Right. Right.
And there's a school of thought to be made that they've already been influencing it lower because it has gotten pummeled basically since they entered office.
Well, they keep talking the dollar down. That's true. And the only way this debt gets paid back, it ain't going to get paid back, 37 trillion in debt, but they're going to try to hyperinflate it away. By the way, beef prices are going absolutely parabolic. This is the decline of the dollar. This is the demise of the dollar. This is an inflationary state coming into fruition, the likes of which have been seen most recently in places like Zimbabwe and where else? Venezuela. I mean, I think that's the track we're on, Chris. And, when I mentioned people selling their silver, middle-aged white women sitting at gold guys selling their silverware, not even silver coins, silver jewelry and silverware, it's to pay their energy bills. Because this is what people are going through right now. People aren't paying attention to Bitcoin or the price of silver. They don't know what my audience knows and what your audience knows, Chris. We've been pounding the table, begging people to protect themselves from this printing machine for decades. And by the way, Chris, do me a favor, grab your custom made Federal Reserve Jerome Powell Money Goes Burr custom chopper. I want you to show people this absolute work of art in just 1 second. But before we part ways, let me play this clip from a young lady who asks, "How you all doing?"
Last month, my electric bill was $300, so I went out of my way to get blackout curtains and fans and not run the AC and turn off all my extension cords and everything. And then this month, I got the bill back and it was $360. How's everyone doing?
How's everyone doing? I'm sorry, man. My heart goes out to folks. Young people have been completely thrown under the bus by this system. They have very little hope of future home ownership. Yeah, I guess if we don't turn this thing around, Chris, and I don't know how we're gonna, that's why you got to protect yourselves with physical silver and physical gold and maybe some Bitcoin. If we don't turn this thing around, Klaus Schwab will eventually get his way for the most part. Most folks are going to own nothing. But Chris, they ain't going to be happy.
Yeah, and like you said, it's you can feel the emotion in what that woman was saying, and everyone's different spots, but certainly I think almost anyone can associate either if they're in that position or know someone, and it's the whole thing is tragic. I mean, what's the best solution to not end up in this position? It's like if some guy's about to go on trial and get convicted for murder. What do you do then? Well, maybe you shouldn't have done it in the first place. So with that said, I am of the school of thought that just our innate human potential that the government does this, government does that, that when we're in the right mindset, you find ways to overcome things. That's how we're wired. And, the things are going to continue on. And even in the Great Depression, there were some people who understood what was happening. And, you don't want things happening at someone's expense, but I guess maybe a different way of looking at it is like, all right, well, if they're going to do this, and I know that that's coming, well, how do we, best prepare against that? And Sean, I mean, I'll leave you with this one. There's a guy named Stephen Myron who wrote this 41 page paper called "Restructuring the Global Trading System," November of 2024, the month that Trump was elected. Excuse me. In the following month, and then in this paper, I won't read all 41 pages of it, but they talk a lot about the overvalued dollar. At one point, Myron even says the overvalued dollar is the root of all economic imbalance. And a month later, Trump names him as the chairman of the Council of Economic Advisors. We've heard J.D. Vance alternate between saying that the Kamala Harris regime wasn't going to protect the value of a dollar being a dollar, yet simultaneously he's talking about devaluations. Trump looks like he's going to do whatever it takes to give Jerome Powell a wedgie if he has to get interest rates lower. And right as this is happening, here's the dollar index got over 110. This is January, the same month Trump came in. It's down over 12% since then. And Sean, this isn't how much it's down against actual goods. This is against the euro and the yen and the British pound and a few others. So even against other currencies that are almost as much of a catastrophe as what's happened here in the dollar. So that's one of the things I've studied and had a few experts on. I do believe there's a case to be made that, let's say they have been influencing the dollar lower, and to achieve their onshoring agenda, they're going to need to influence it a lot lower from here as well. So that I can give you a good link to that one because they said they were going to do it. They've come in, the dollar has gotten torched. There's a lot of evidence, if you're looking in the footprints, that they're doing it and that they're going to continue to do it. So, again, what's the best solution? Not end up here, but what do I think is going to happen? I would start there because it seems like that's the path they're going down, and there's going to be trade-offs to it. But at least the better people can understand what is coming or likely to be coming, then at least you can work around that. And if
Try
you're
to
getting
prepare.
a much lower dollar value, that's probably going to be incredibly good for gold and silver.
Yeah, it's time to prepare, folks. Nobody's coming to save us. It's time to prepare for what's coming, and that's dollar debasement and a race to the bottom. Now, Chris, you're a thoughtful guy. You're a musician. You're a good guy. I've known you for a long time. You're a generous person. He once sent me an entire tube of silver just out of the blue. What a sweet
I forgot
guy.
about that.
Yeah, you probably want that back at this point. It's doubled since you sent it to me. But you're
No,
such a generous
I'm
guy.
glad, honored to have it. I just hope I get one of the first. Do you have your own silver coin yet,
Yeah, I
Sean?
think I sent you a couple,
SPT
didn't
ounce?
I? I think I sent you a couple, didn't I?
I might need to buy one of those
Oh, I
or a
can send you. I'll
stack
send.
of them.
Here's the thing. You're a thoughtful guy, you're an artist, and you created Show People the Chopper, the Ben Bernanke Money Go Burr chopper. It's so cool. It's solid
There it
silver.
is.
Solid silver, correct?
This one is sterling,
So
although they were originally made outside of the US, and I got a crash course in customs fees. Although now we have a guy who makes them in the US in 3/9 fine. So we sold a couple of them this year, and it's I love the size of the bald forehead. That's my favorite part, and that's spinnable propellers. I don't know if that's showing up there. So if anybody wants silver chopper Ben figurine, you can find that on arcadiaeconomics.com. I'll give you a link for that, Sean.
all right, I'll leave it below. And how many total ounces of silver are in that chopper?
He's 26 ounces.
Wow, that's a big
I'll
one.
give you a link for the page if anyone wants to take a look at it. And also, Sean, if I may add, we touched on it a little bit, but a lot of the things we talked about today is what I've been writing up in that report, which I think we're finally be able to get it out this week, and it's a free report that I mean, the goal was to address a lot of these questions, which are often nuanced, and I hope it was able to explain it clearly enough for people to understand it. But if anybody wants to get a copy of that report when it comes out, you can get a free account on the Substack, which is goldandsilverdaily.substack.com. So
Perfect. All right. Here is the Twitter page. If you prefer to call it X, you're going to find it at x.com/Arcadia Economics. Chris Marcus, host of Arcadia Economics on YouTube, lifelong musician, and a big fan of silver. You and me both, brother. You and me both. It's always great to catch up. Thanks for
Sean,
joining me on Labor Day, too, by the way.
it's always a pleasure to talk with you. I think I'd said anytime you need me, and then you're like, "How about Monday?" I'm like, "Isn't that Labor Day?" But I'm what what else could I have been doing that would be more fun today than talking to someone like you that I really respect and care about, and you admire because you've stood up for a lot of things that are difficult. I know the YouTubers didn't like that, and but I think that's really a lot of great things you've done, and appreciate being able to be here, and anything that I can ever do to help, you can call me.
Well, thanks, brother. I appreciate you. And right back at you times 100. And of course, you could be out today by the pretty girls, by the pool. Chris is single.
Sean's got more grams per ton, though. That's what's important. And Sean, we might need to make the Sean figurine. I'll see if I can get the artist to capture the abs and pecs.
Uh,
Obviously, will be a challenge, but maybe next year we'll get the Silver Sean.
all right. From your lips to God's ears, Chris Marcus, a friend of the show, a friend of humanity. Anybody who stands for silver and against the banksters is a friend of humanity. Chris, happy Labor Day.
Thank you, Sean. Great to talk with you.
You too, brother. Really appreciate it. All right, guys. Thank you so much for tuning in for this silver celebration call. Many more of these in the future because I think 50 is right around the corner, and I don't think the bankster paper can stop it at this point. China's awake, Russia's awake, the billionaire David Bateman's awake. Friends, you better get some. Start stacking if you haven't yet. And I'll remind you every single day for free. Check us out to get the real news, the antidote to corporate propaganda 24/7 at sgtreport.com. And until next time, may God bless you and yours. Bye-bye.
Kids are being overwhelmed by a tsunami. I mean, they're swimming through a soup of toxic chemicals today, and many of those are endocrine disruptors. There's atrazine throughout our water supply. Atrazine, by the way, if you in a lab put atrazine in a tank full of frogs, It will chemically castrate and forcibly feminize every frog in there, and 10% of the frogs, the male frogs, will turn into fully viable females able to produce viable eggs.
All right. Well, thank you to Sean. It was fun talking with him. Also, just has become a really nice friend, and always good to catch up with Sean of the SGT Report. We'll get him back on the show sometime soon. And just one final note before we wrap up here is that I think most of you are aware of the Substack that we have. Yet in either case, by the way, this one was interesting. Let's just say that Russia didn't have the fondest comments of the U.S. financing system at the moment, but did have a note about Bloomberg and the silver scarcity. Also, we did finally post the Arcadia Silver Report. So I will put the link to that in the description field below, and talked about a lot of these things that were discussed in today's call, as well as things that you're hearing in Bloomberg and from TD Securities. So again, link in the description field. Hope you enjoy it, and I will see you again soon.